Too close to call a presidential race has Wall Street on edge. Over the past few weeks, analysts and strategists have weighed in on which segments of the market could outperform under a different election scenario. Some of those election trades that we are watching, a number of them, gold, Bitcoin, and the energy sector. I want to focus on what we heard from Harris, because a lot of the emphasis has been placed on some of those Trump trades, right? But now we have certainly seen a bit of a shift in terms of what investors are pricing in. Home builders, that's something that's going under the radar, just in terms of the fact that Harris has prioritized home affordability within her economic plans, and also discount retailers. This is an interesting play, maybe an under the radar play, but we have heard from a couple of strategists here on the program. There's also a recent note out from Evercore talking about the fact that names like Burlington Stores, a name like Ross Stores, is positioned to benefit and outperform there under a Harris administration, given the fact that we could see further social support under a Harris administration, maybe compared to what we would see for Trump. And those, of course, would be two trades that would outperform here under Harris.
And it mirrors what we heard this morning from the National Retail Federation, coming out saying that Trump administration, if the tariffs he's proposed did in fact go through, that could cost consumers $78 billion annually and would pressure low-income consumers in particular. So that's kind of the opposite trade if you do see a Trump win. Having said that, I also want to look at energy. There's this idea that energy stocks tend to outperform under Republican administrations. We've actually seen the opposite under the Biden administration. But the new hot item when it comes to energy is, of course, nuclear. We saw nuclear stocks under a lot of pressure yesterday. But what is going to be the long-term story when it comes to nuclear under either administration? We spoke with CFRA analyst Daniel Rich about that, and here's what he had to say.
Wind and solar and other tax credits that could be in the crosshairs potentially under a second Trump presidency, or if there was a Republican sweep in the election. But we do think nuclear has a lot of bipartisan support right now. It's our understanding. And no matter the outcome of the election, we think that's going to be a fuel resource that's going to be more favored going forward.
So nuclear, perhaps an investment opportunity that is safe regardless of who enters the White House, just given the enthusiasm we've seen from these big tech players needing a lot more energy to power AI. It seems like nuclear is the energy pick for those tech companies.
Yeah, certainly. That is a great point. And also that brings me to a topic that we talked about from a number of strategists here on the program, and that's what's been happening with gold. You have gold right around record highs. We've had this massive run up. A lot of that being tied to the Trump trade, just in terms of inflationary pressures that we could see under a second Trump administration in regards to taxes, in regards to plans for tax cuts, what ultimately that is going to do for the deficit. We had a chance to speak with Eric Ditton. He is the president and managing director of the Wealth Alliance recently about the run up that we've seen in gold, and take a listen to what he had to say.
I think gold, probably Bitcoin as well, have further to go, because we just don't have a plan as a country to deal with this 35 trillion in debt and growing. And we're listening to both candidates, and I haven't heard any talk about any kind of reduction in spending. There is no plan.
He also went on to say that obviously the Trump administration would be bad for the bond market, just given the fact that we could see this increase in fiscal spending and what exactly that means. Obviously, you have an increase in fiscal spending under Harris as well, which is very important to point out. But when you take a look at the two plans, and at least the early analysis of Harris versus Trump, Trump is expected to add much more to the national debt over the next 10 years versus Harris policy. So that, of course, is where some of the differences come down in terms of play. Two other things that stuck out to me that I wrote about this weekend are Trump plays under a potential Trump presidency. One is in financials. Take a look at those credit card companies. When you take a look at Visa, when you take a look at MasterCard, what ultimately a Trump scenario would mean for them. A couple of analysts that we spoke to said it would actually be a worst case scenario if we did see a Democratic sweep. As you talk about an increase in regulation, you talk about exactly what that means, a tougher stance potentially on the DOJ's lawsuit versus Visa, and the potential new laws that we could see to lessen Visa's and MasterCard's competitive advantage. That's something that stuck out to me. And then also on the managed care basis, this is also an under the radar play that I haven't seen get a lot of attention yet, but just in terms of how Republicans historically have greater support for privatized programs like Medicare Advantage, has long been preferred by Republicans. You could see some of the names on your screen, specifically Humana there, could potentially get a big boost if Trump were to be in the White House.
Yeah, certainly a great play to point out, Seana. that we're not hearing a lot about. So it's great that you brought our audience that insight. And we're also still seeing that action playing out in treasuries that you mentioned as well, yields moving to the upside in the front end of the curve. So we will continue to monitor that.